Ladies and gentlemen, welcome back to Business from the Beach. We're in Tobago. I'm Majid like magic, and this is my good friend Darryl Bandoro.
Thanks for having me, G.
I wanted to introduce you guys to him. He is the man who makes rich people richer. He works with high net worth individuals to make private investments that are not typically available to the public, and he's gone through the stock market as a sort of a stockbroker, advisor, and then into real estate. I met him as a fellow real estate investor. He was a mortgage broker, and now he's doing these high net worth individual private investments, which I wanted to share with you his knowledge about how to grow your money safely. But first, Darryl, tell us about how'd you get into this business?
Sure. Well, I've always been a bit of a numbers nerd, if you will. Growing up, my parents will tell you that my friend's favorite toy was a remote control car, and mine was a little Snoopy calculator with math problems going on it. So I took that passion and I went a little bit further with it in my career. I guess you said, I became an investment advisor, focused on the typical stocks, bonds, mutual funds. But I realized, it was the time of the tech boom and the dot-com bubble, that it was a really volatile space. And when it really hit me was in 9/11 and in the aftermath. People lost huge amounts of their savings. They were crying in tears, and they just weren't prepared for that kind of loss. And I thought there must be a better way. So as you mentioned, I looked into real estate, and then I finally discovered private market investments, where it's typically a field for the ultra high net worth, or for companies like pension plans. And this is basically investments into private companies or private real estate deals. And what I'm able to do is to bring these opportunities that are of high quality to my clients, who are typically, as you said, high net worth investors.
Got it. So from the stock market, the emotional roller coaster, to real estate, and why not real estate? Why these?
You can make a lot of money in real estate, but it can be a lot of work, and a lot of things can go wrong. You're basically running a business. So most of my clients, they have their own business often, or their own job, and they just want a passive investment that's going to be secure and provide them with some good growth. And real estate, direct real estate investing doesn't always fit the bill.
Got it. So I asked Darryl to provide some tips that would be useful for anybody in investing, and asked him what are the biggest mistakes investors make. So
sure. So 5 big mistakes that I've seen in my 17+ year career is lack of diversification is number one. You invest into one sector and you put all your eggs in one basket, and the result is, if something happens in that area and the market crashes, then you've lost a big chunk of your money. So you don't want to put all of your eggs in one basket. You want to spread it around into a few different investment options. Number 2 would be not doing your research, your due diligence. Not everyone's like me. They're not going to want to pour over the financial documents, the financial statements, but at the very least, you should be getting some kind of trusted investment advisor to help you with your decisions. Working with a family friend, or just getting some tips from your buddy might be good if you're just trying to play around with a few dollars, but it's really not a great way to treat your life savings. Beyond that, chasing returns is another big mistake that people make. So you'll look at areas where you look at the news and they'll say gold is going to do well in the next little while, or you should get onto this tech company because they're going to do excellent. What's really better to do with, again, your life savings is to have a plan and stick to that plan, and not start chasing everything here and there as it comes in.
Okay, diversify, work with an advisor, don't chase returns. We were talking earlier about how your approach sounds kind of boring.
Yeah.
And your clients actually want it to be boring.
Exactly. They want me to protect their wealth, add a little bit of growth, but they've worked really hard to make the money that they have. Number 1 key is don't lose your money. And so most of my investments, they deliver a decent return, but they're boring. They're real estate. They're some basic businesses. They're not super exciting. You're not going to double, triple your money. But my clients are pretty happy with that.
So they're real estate plays, but they're not active. None of your investors are fixing the toilet.
No, they're investing with teams that have been doing been operating in the world of real estate often for decades. They have the experience. They know their market. They're just looking for investors to participate in some of their deals, and I can help facilitate that transaction.
Got it. All right, I think we got 3 of the mistakes, and what was number 4?
Well, number 4 was going to be basically a sunk cost bias. And that's when you decide you make an investment, maybe it was from a tip from your buddy, and lo and behold, 6 months later, it's crashed and you've lost 20, 30%. And you're like, well, maybe if I just hold on to it a little bit longer, it's going to go back up.
Double down. Buy it when it's low.
Buy it low. Well, you know, maybe that's the right thing, but what you should really be doing is, again, looking at the reality, the fundamentals, working with an advisor, say, is this the best opportunity today?
So sunk cost bias means you're kind of influencing yourself from past.
Another way I like to put it is you've made a mistake, and now you don't really want to admit that you made that mistake, so you're just going to hang on.
Got it.
But when the smart thing to do might be to do is to move on and get into another investment that's actually going to make money.
Okay, cool.
And the last one, number 5, is thinking that the stock market will bring you stable returns. We've already touched on that. A lot of people put all of their money in one form, shape, or form or another, maybe stocks, bonds, or mutual funds, into the public markets. But the reality is the public markets are highly correlated. You're going to have these huge swings in the stock market. You're going to get a roller coaster ride. And basically what that is an emotional roller coaster ride for a lot of investors. And what comes with that is some highs, but also you get stress and you get anxiety because you're worried about when the next crash is going to come. And so what I help do with my clients is I help them diversify into private investments. These are private companies, private real estate projects, which are not correlated to the stock market. And by doing that, it gives them some stability and helps them sleep a little bit better at night when they're thinking about their investments.
Cool. There you have it, the 5 most dangerous mistakes investors make. And yeah, if you want to get off the emotional roller coaster of the stock market and get into the boring life of steady returns where you don't lose your money, talk to Mr. Darryl Bandoro. My name is Majid Like Magic. Thank you for watching from Tobago, business from the beach. If you want to grow your money, if you want to get rich and get richer, talk to this guy.